Hey guys, welcome to a new video. So today I'm going to be talking about Roundhill versus YieldMax. I'm going to be talking to ChatGPT and GROK and seeing what they think, what's their recommendation between both of these two big players in the high yielding ETF space. And they're actually quite different. So it'll be interesting to go through their different perspectives on it. But also things are just really heating up. I remember 3 or 4 months ago, and everyone was talking about ULTY. They're getting into ULTY. They're loving YieldMax and ULTY's distributions. A year ago, it was MSTW, and now things have really changed. Roundhill seems to be the player on the move. People are moving into WPAY. People are loving some of the Roundhill ETFs. So that's what we're going to be talking about. And then at the end, I'm going to compare 5 of the biggest ETFs, the most popular ones, 5 of the big tickers, compare Roundhill against YieldMax in kind of total returns and showcase some of my thoughts on that. So before we get into it, a bit of a disclaimer, this is not financial advice. This channel is purely based on my thoughts as I navigate my own personal investment journey. Please, always do your own research. So let's get into it. First, I'm going to go into ChatGPT, and I've asked her, I call her because I pay for ChatGPT. It's ChatGPT 5 Pro or something. And I call her because I have a woman's voice doing it normally when I talk to it on the phone, right? But asked a few questions and the results were a little bit skewed. I think Grok's answer was a little better, so we'll get into that. But my first question was, in comparing Roundhill versus YieldMax, which company offers the better investments in the high yielding ETF space? Now, she gives a lot of information, so I'm not going to go through it all. But one interesting fact was that Roundhill currently has 8.4 billion in assets across 36 ETFs in its portfolio space, I guess. So it has 8.4 billion kind of AUM, and whereas YieldMax has about 17.7 billion AUM. So YieldMax is still the much bigger player. I think when the space first came about, YieldMax was really the main player in the high yielding ETF space. And of course, these other guys, these competitors are catching up. But still, YieldMax with 17.7, that's more than double what Roundhill have got in assets under management currently. So that's an interesting point. They talk about different strategies. And then it gets to my view. If I had to pick one side as better for a typical income seeking investor, but still comfortable with elevated risk, I'd lean to Roundhill for the following reasons. 1, their strategy, at least in some funds, seems a little more diversified, index-based covered call strategies compared to highly concentrated single stock option. Now that's answer is a bit worrying to me because that's not really the case. I mean, obviously the weekly pay ETFs in Roundhill aren't covered call strategies, so I'm a bit dubious about this answer from ChatGPT. But anyway, we'll continue on. 2, slightly lower, though still very high yields may correlate with somewhat lower risk, though lower risk is relative here. Lower risk, again, that's debatable considering Roundhill use 120% leverage on their weekly pay ones. Maybe she's simply talking about the covered call ETFs that they have, like YETH and some of the other ones. The fact that YieldMax, number 3, the fact that YieldMax yields are extremely high raises concerns about sustainability. Many option income strategies can produce high yield when volatility is favorable, but if underlying stocks crash or premiums shrink, the income may falter and principal may suffer. This risk is highlighted in commentary. This is kind of talking about the NAV narrative, I guess, that NAV really gets affected by underlying stocks, it's capped and that sort of thing. So it's interesting. She's kind of lent to Roundhill there, but some of her arguments are a little bit questionable in my opinion. So second question, if you had to choose 5 ETF investments, either from Roundhill weekly pay or from YieldMax, which would you choose? And she's gone and listed her favorite 5. So Apple, so AAPW, NVDW, again, this is worrying that she hasn't even got the ticker right, NVDW, TSLW, I think it should, TSLW it should be, again, she got the ticker wrong. And then she's gone from YieldMax, MSTW, and NVDY. So she's gone for 3 from Roundhill, 2 from YieldMax, and she's talked about why Apple is large, relatively stable. She's looking for stability. You still leverage 1.2x, so downside is magnified, and Apple drop means so that's the risk of it. Again, very similar things like big players, NVIDIA, Apple, Tesla, and I think that's why she's picked those ones. MSTW, that's an interesting choice considering how MSTW's been tanking recently. This is one of YieldMax's flagship single stock options. It uses covered call or other option strategies on MicroStrategy. If you're seeking very high income and comfortable with high risk, the fund offers significant yield potential. Risks very high. All right. And then NVDY, again, she just picked a big player with options income. Okay. All right. Last question. So based on performance so far, if you had to choose between Roundhill or YieldMax, which one would you choose? And so it's interesting that if I had to choose between the two issuers based on performance so far, I would lean toward YieldMax ETFs over Roundhill investments, but with some strong caveats. Now that's really interesting. She's gone for YieldMax because literally in the other question, she went for Roundhill, I think it was, right? I'd lean towards Roundhill in the first question. So some of these answers from her are a little bit questionable, in my opinion. Why YieldMax, the average one? I think the reason she's done this is because there's YieldMax ETFs obviously have a longer time span. They've been around a lot longer, and so there's a longer period to get results from. And yeah, that's probably it. The average 1 year return across YieldMax's 57 funds is shown as minus 35%, but that's across the full lineup, including that's a weird answer. The fund from Roundhill that we have data for, WPAY, shows very modest recent performance over the past month. Okay, but it's only a month old. It's done amazingly. It's a very weird answer. Meanwhile, for YieldMax, the Universe Fund YMAX shows a total return of 31% and a year-to-date of 19%. That's pretty good for YieldMax, so I guess that makes sense. So if you compare what's been achieved so far, YieldMax has at least shown stronger absolute upside in certain funds versus Roundhill's weekly pay, which is quite new with limited. So I think she's just chosen it because YieldMax has more data. It's been around a lot longer, so it's got some upside, whereas Roundhill is very new. Now, let's go to GROK. I found those, I pay for that subscription. So I was a bit like, I don't know about these answers, and I'm not sure I should still be paying because I don't like them. I don't like the answers. But then I went to GROK and GROK's answers were quite different. So let's have a look at what GROK said instead. So if you had to choose, go to the top. So in comparing Roundhill versus YieldMax, which company offers the better investments in the high-yielding ETF space? So, Roundhill investments, and then down here, it actually does a proper comparison of them. And this is what I like to see. So it's got the big players, the big tickers, and then it does a total returns to date. So we've got NVIDIA. This is Roundhill, up 37%. NVDY from YieldMax up 27%. So the Roundhill one has a better performance return. TSLW up 27% since inception. Tesla up 18%. So again, Roundhill does better. COIW up 51%. Coney only up 20%. That's more than double the performance from COIW to Coney. Much, much better for the Roundhill ETFs. Now, MSTW down 19.4%, MISTY only down 8%. So this shows that when prices are going down, when share prices are going down, when we're potentially going into a bear market, Roundhill might not be the option, but YieldMax might be the better option because obviously there's the leverage, and so it comes down. QDTE, that's the NASDAQ 100, up 15% versus YMAX up 8%. So again, 4 out of 5 wins for the Roundhill versus YieldMax. Now again, lots more information here, which offers better investments. Roundhill investments offer the better overall investments in the high yield ETF space for most investors in 2025. Its leverage strategies have delivered superior total returns, 27 to 51% total returns across top funds in the ongoing bull market, with weekly or daily distributions providing more frequent income than YieldMax's monthly model. Although, as we know, this has changed last week, that YieldMax has gone to a weekly model. This makes Roundhill ideal for growth-orientated income seekers who can tolerate higher volatility, e.g., QDT is 2.3% versus YMAX is 3.8%. That said, YieldMax is superior for conservative income plays. Its covered call approach limits losses. This is important for, again, a downturn in the market. a crash, a bear market, a correction, whatever you want to call it. Minus 9% versus minus 19%, and offers sky high yields, 50 to, I'm not sure that's 50 to 140% for the whole YieldMax portfolio, though with more erosion risk. Again, very important. I've talked about that a lot in my previous videos. If market turns bearish, switch to YieldMax. And I've talked about this before. I've often thought about when we hit, like I'm invested high in crypto, once we get to that kind of euphoria, if it looks like the market's going to take a downturn, I'm going to be getting out of the Roundhill ones. That 120% leverage is risky in my opinion. If we tank, we're going to tank hard on those Roundhill ETFs. Recommendation: diversify across both. 60% Roundhill for growth, 40% YieldMax for stability. Start with broad funds like QDTE and YMAX, mitigate single stock risk. Always consider your risk tolerance. These aren't set and forget. Okay. All right, next question. If you had to choose 5 ETF investments, either from Roundhill Weekly Pay or from YieldMax, which would you choose? Now, I'd much prefer this answer from GROK than ChatGPT's answer. I think this is a much, much better holistic approach and answer to that. So GROK wins on that question, in my opinion. If you had to choose 5 ETFs, which would you choose from both players? So it's gone for number 1, HOOW. Can't go wrong with HOOW. It's been absolutely crushing it. So I agree. HOOW. PLTW, Roundhill. She's gone for another Roundhill. Again, been performing extremely well. NVDW. It's gone for the big players from Roundhill Weekly Pay. Then from number 4, Misty. Again, so both ChatGPT and Roundhill and GROK, have said Misty. They would include Misty, even though its price performance in the last few months has absolutely tanked. And we're in a lot of fear and pain if you're a Misty holder like myself, even though I've been rotating into MSTW a lot. 5th, YMAX. Diversified basket. I think it's lower risk. That's why it's chosen that. Quick rationale. These lean Roundhill heavy, 3 out of 5, because 2025's bull favored leverage, e.g. HOOW, PLTW, NVDW averaged 48% total returns versus YieldMax's 35%. But Misty YMAX add downside cushions and insane yields. Okay. Total portfolio yield 90% blended, but expect 20 to 30% fall. Entry dip, it's getting what's your risk tolerance? Okay, great. But I really like this answer. I like those options. I think that's good. Apart from, I think Misty right now is a good buy actually. So I think that's those are good choices. So I think GROK wins on that one as well. So last question: based on performance so far, if you had to choose between Roundhill or YieldMax, which one would you choose? Based on 2025 performance data, Roundhill weekly ETFs edge out YieldMax for high ETF investments. Roundhill leverage strategies 1.2x with weekly returns deliver superior total returns, averaging a 48% total return, like HOOW, which is up 55%, PLTW up 50%, NVDW up 39% compared to YieldMax's plus 35% for its similar peers. The bull market in tech, crypto, NVIDIA, Palantir amplified Roundhill's upside capture and weekly payouts. Now daily declarations for some offer faster compounding than YieldMax's monthly distributions, although that has now changed to weekly distributions. Posts on X and Reddit also tilt toward Roundhill for better NAV stability and growth. Very important. We've been talking a lot about NAV stability and how YieldMax seems to suffer more NAV erosion than Roundhill due to their capped upside. However, YieldMax shines in downside protection, e.g. Misty versus MSTW, and high headlines, 50 to 140% versus Roundhill's 60 to 120%, making it safer for income-focused investors in choppy markets. Both face NAV erosion risks from ROC-heavy payouts. Very important piece of information. Verdict: choose Roundhill for maximizing total returns in 2025's bull market. Very good point. I agree with this, especially if you're growth orientated and can stomach volatility. 4 to 7% versus YieldMax's 3 to 6%. Roundhill is a riskier play. It's got the 120% leverage, but it will perform better in a bull market. If markets turn bearish, YieldMax's stability might take the lead. Diversify across both, e.g. HOOW and YMAX for balance. Not financial advice. Check risk tolerance and consult a pro. Thoughts on your investment horizon? So really interesting. I think GROK wins 3 out of 3 on those answers. I was not impressed by ChatGPT's answers. Maybe ditching that subscription. But again, I think the consensus here is that Roundhill will perform a lot better in a bull market. And YieldMax, it has some downside protection. YLTY particularly has downside protection. So I think when it comes to, it looks like we're maybe euphoria top, or the market's topped, or things are getting overvalued, might switch into some of the YieldMax players, even some of the short ETFs maybe, and YLTY, something with downside protection, which Roundhill doesn't offer. You're going to get absolutely smashed in a bear market from these 120% levered Roundhill ETFs. But on top of this, I just want to talk, we are in a bull market. So what has been performing better and what will perform better if the bull market continues, which it looks like it will, because interest rates are coming down. It looks like an interest rate cut is almost guaranteed at the end of this month. It looks like there'll be another one. So it looks like there'll be an injection of liquidity, and that stocks and crypto will continue to do well over the next 2, 3, 4 months. Not a crystal ball, not financial advice, but it looks like from the macro, that's what's going to happen. So if past performance is anything to go by, you might want to stay in Roundhill. Maybe that's what I'm doing. And based on past performance, which is what I'm going to show you now from the 5 most popular ETFs, what's winning. So first up, we compare HOOW to HOOY. So HOOW is obviously the Roundhill one, and that is up 76% since inception versus 51% from HOOY. Now, if you hold either of these, congratulations, you're absolutely smashing it, you're doing well, and it's great to be in either. But HOOW obviously takes the win for this one, up almost an extra 25% in total returns. Now, Palantir, PLTW versus PLTY. Now, this is a bigger difference. Since inception, PLTW is up 62% and PLTY is up 22%. This is just since the inception of the Roundhill ones, because we want to make a fair comparison over the same time span. I don't go all, because obviously if you do all, then it's just not fair at all. Like, it doesn't make sense. Like, because PLTW was incepted around, just before the tariff chaos kicked in. So you've got to do it on a same timeline for it to be a fair comparison. So we do it since inception, which is max, and PLTW kind of smashes PLTY out the water. I do hold both, but definitely I think PLTW is the better investment. Next one, NVIDIA. So NVDW versus NVIDY. Again, it's been bullish. Like the share price of NVIDIA has been going up steadily. It's been a bit volatile, but it's ultimately been going up. So NVDW is up 38% versus 29% for NVIDIA. So 3 out of 3 for Roundhill so far. Now we go on to Tesla, one of the other big characters. 31% for TSLW. So again, that's the Roundhill one, versus 21% for Tesla, the YieldMax one. Again, another win for Roundhill. In a bullish momentum, in a bull market, these Roundhill ones, it's shown, it's proven by the data that they will do better through that leverage, through that 1.2x return on the underlying. Now, the last one, so that's 4 out of 4 wins for Roundhill. But the last one is MicroStrategy, which has been absolutely tanking. We've been getting smashed on MicroStrategy. And so you will see here that MISTY is down 27% and MSTW is down 36%. So what does that show you? Like the consensus, like Grok said, in a bear market, when markets are going down, you want to basically get out of the Roundhill ones and rotate your investment into either the YieldMax funds or into something a lot safer altogether. Take your money out of the market, just put it into something. So if you know that it's going to be a bear market, maybe put it into some of the short ETFs, test them out, the YieldMax ones, SLTY. I haven't looked into it myself. Winter, from like, if this continues, then winter would probably be going up. We could actually have a look. Should we have a look at winter? Let's have a look at winter and see what that's been doing. Look at that. See, bear market. This is what the bear market will probably look like. I mean, you could say we're already in a bear market for MicroStrategy and Bitcoin, the way it's been performing in terms of price action recently. But winter up 24% and MSTY and MSTW down a lot. So this is probably my play going into a bear market. I shift at the highs, the euphoria of Bitcoin, when everyone's like, we got to buy Bitcoin, it's going up, it's going parabolic, it's, you know, it's everyone and his best mate are talking about Bitcoin. That's when you want to sell probably your micro strategy position, your levered ETFs, all that sort of stuff, and potentially get into an ETF like Winter. And as this shows, that looks pretty good to me. You've got a 24% total return performance in, what's that, 3 or 4 months? Not bad. So just my thoughts on this. Obviously, this kind of shows that Roundhill in a bull market, better performance in a bear market, probably YieldMax, although we don't really know yet. We haven't been in a proper bear market. But again, you might want to be considering options like Fiat, like Winter, like SLTY when it comes to a bear market. And you still want to be in this, excuse me, high yielding ETF space. So I hope that was of some value. Let me know what you think. Do you prefer Roundhill? Do you prefer YieldMax? Do you prefer some of the other players in this space? Please give us a like and a subscribe. Let me know your thoughts in the comments, and I will see you in the next one. Cheers.